yesterday was ridiculous for gold. I've already met a lot of traders who actually lost their money or blew up their accounts on Monday, which in reality it wasn't that much of a surprise, but um, I mean, it in compared to yesterday, the amount of people actually getting stopped out, wow, is way higher. Okay, huh? Yesterday was crazy. Yesterday, gold actually reached its threshold of 3,500. Okay, so by reaching the price of 3,500 per ounce, it actually caused a major gap that occurred. Okay, I'll spend a little bit of time here to explain the gap occurrence. Okay, the whole gap is due to the fact that many institutions, okay, or institutional traders, they set a target at 3,500. Once it's reached, basically, doesn't matter about what any government says, okay? Fact is, when it reaches a threshold, okay, and then you experience that pullback, okay, then everyone will actually start exiting their trades based on their take profit point or their stop loss point, and then recalibrate their whole trades. You see, it's crazy because the gap didn't just happen on gold. It happened almost on every single instrument, okay? So you see there's a gap over here, okay, which is not that clear. Here, I'll show you something else that's more clear. There, the gap, super big, okay? Oh, there's a gap, super big, okay. Gap means that's the closing price, that's the opening price, okay? You see it opened up with a major gap, okay? Every single pair opened up with a gap. Over here, you see that gap as well, okay? So when we see a gap, expect that the market is recalibrating, okay? All right. Now, anyways, PTips D1 claims for gold is that RSI is above 50, okay? And then the dual Bollinger Bands prices are above the top bands. So usually this is a very classic bullish indication, okay? But usually due to the gap, I don't really know if technical indicators are all that useful anymore, okay? Gaps will disorient the mathematical calculations for pretty much anything, all right? So anyways, let's drop our time frame down to H4. Okay, so based on H4, let's take a look at PTips. RSI right now is below 50, okay, and then the dual Bollinger Bands, prices are between the lower bands. Okay, so overall, this is an indication of potential more bearishness, okay? So in the case that it does respect this analysis, prices should continue going lower, okay? At least for the short time frame, all right? Now, this is actually a key point over here. This is a key resistance, okay? See, there's a key resistance. Sorry, key support. Sorry, key support. And then if prices keep on breaking below it, then obviously there's going to be a lot more people that are going to give up their buy orders, and then they're going to enter into more selling orders, okay, for gold. Although the overall large direction, we do see that it could be more bullish, okay? All right, cool. So based on H4, it's a bit more bearish on the indications. Now let's take a look at H1. Okay, so based on H1, RSI, PTIP says that RSI is below 50. The dual Bollinger Bands, prices are between the lower bands. So this is also creating the same thing as in H4, which is a classic indication of more bearishness, okay? Now, if you want to trade extra carefully, wait until prices break below this 3,300 threshold and then enter with a sell. Okay, but then usually when it reaches that point, it will do a little bit of a pullback. So beware of that. Okay. All right, cool. So without further ado, let me actually just dive in and place a few trades. Don't follow along. Okay.